What's an IUL? I don't understand.
It's just a life insurance policy. It's a permanent insurance policy. It builds a cash value by tracking the stock market. If you put extra money into it, then that extra money builds up inside the policy, and then it gets to earn interest based on stock market indexes like the S&P 500, for example.
So it's an investment.
No, it's not an investment. It's a life insurance policy. So you're purchasing a death benefit. It's technically a product. There's going to be a cost of insurance. As you put money in, the cost is taken out, but then you earn interest on that extra money, like I was saying. You want to purchase just a little bit of death benefit and then fund the policy as much as you can so that the IRS doesn't get mad. And then that extra money earns interest by tracking indexes, like I said. Not an investment, close, but not an investment.
Then why are people freaking out about this stuff?
People are freaking out because the cash value is leverageable and it's liquid. So as soon as there's a cash value, you can borrow from it in the form of a loan. Yes, it's your own money, and loaning from it is actually smart because when you take a loan, let's say you had $20,000 in your policy and then you borrowed 10 grand, you're still going to earn interest on all 20,000 even though you borrowed the 10 grand. So you could take the other 10 grand and go put it into other investments. And technically, you don't have to pay the loan back in a certain amount of time because the death benefit, remember you purchased a death benefit as well. That death benefit would pay off any loans that you didn't repay during your lifetime before the remaining death benefit was passed to your beneficiary, like your kids or your loved ones.
Okay. So how come I've never heard about it until now?
Well, a lot of people have been screwed over by purchasing IULs because the agents who sell them know that they make more commission the more death benefit they sell. So they don't usually set the policy up to be max funded, which is what is better for the client. And the government doesn't want people to put all of their money into life insurance. They'd rather people put all their money into 401ks, IRAs, because life insurance has certain tax advantages that those accounts don't. Right now, it's quoted that the government loses out on about $80 million a year just because top CEOs put all of their money into life insurance.
Okay, gotcha. So where should I go to make sure that it's done right?
You could start by following me. I educate on the proper structure of IULs, and if you reach out to Power 3 Financial, which is my company, we educate first, we strategize, and we make sure that you understand how to max fund your policy. Whatever amount you want to contribute, that's what we want your max contribution to be. So, Power 3 Financial, that's your place to go.